good. That was. I'm pretty sure I knew the answer to that. I'm filming a couple videos this week, and so I wanted to get your take on that for a video.
Yeah, sure.
So cool.
I'm happy to help.
Make sure. And I need a CPA that'll actually go on camera if you know one.
I possibly have one. I'll reach out and ask.
There we go. Okay, cool. I appreciate that.
Yeah, of course. I'm going to try something with my sound real quick because it's driving me nuts.
I can hear you. Is it like fast forwarding going? Or is, oh no, it just looks like it's going so fast. Where's the comments? Who's in the comments?
Oh, okay. That's way louder. I can actually hear. Do I have a bad echo now?
Nope, not on my side.
Oh, great. Okay, perfect.
I don't hear it. Yeah.
Y'all are amazing. Thank you. Yeah, I just don't know. It sounded like everyone was whispering, which I know there's like a channel for that, and that's not here.
ASMR channels, is that what you're talking about?
Hello, this is Austin Real Estate with the REALMigos.
That could be a theme. Like for what?
I don't know what theme that would be, but okay.
You know, just if it gets dull.
Oh man. Echoey echo. Mark says there's an echo, but I don't hear it.
Oh, really? It might be me now.
Mark, you still hear it? Because I don't hear it. YouTube Studio, my channel. Let me see what's going on. Turn that off. All right, it's about 9 seconds behind. Okay, we are back at it again. REALMigos, your host, Jeremy Knight. I got a slew of friends tonight. We have Kevin with man. All right, no echo. We're good now. Ian, blurry faced McGee. Hello, how are you?
Am I blurry? Really?
You're blurry
I'm looking
now.
at this. I'm like super HD, man. WQHD or whatever, right?
Yeah, I think my thing said no more HD for Ian. Hello, we are doing the AMSR channel.
My connection.
And then our really good friend, welcome back, Sarah Morris with CNG Financial.
Hi, everyone.
Hi. So
hello.
We have quite the show tonight. I got questions about this crazy interest rate hike Armageddon. We'll call it like that. Crazy interest rate hikes going. Going to get Sarah's take on that. We're going to talk about the market in general. New stats came out, so we are going to go through and talk about those stats. I do have a question for the audience, and if you can, do me a favor after the show, drop a comment because I want to hear from people about this. So right now you can do it, and then after the show, do it as well. I'm gathering some data. If you move to Austin or another city in Texas from California, do you regret it? What are some of the things you like about Austin or wherever you are in Texas? And what do you hate? I want to hear from you in the comments, just gathering some data for future content. Joe, yes, Ian is in 480p. Joe, welcome back, man. Appreciate you. Mark, appreciate you again. So again, drop that comment in. I have one more question before we get going. I've been putting YouTube shorts out on my channel. Are you watching the YouTube shorts and do you find value in those? Yes or no? Drop a comment. I want to hear you go there. And then I'm looking for a tax professional to do a video with. So if you know a tax person, send them my email, homes@austinitehomes. I'll drop it in there right now. Shoot me an email. Kevin and Ian, how has your week been?
Busy, bro. Haven't stopped.
What's the word?
Just haven't stopped moving.
Yeah.
Yeah. Still nothing to, I mean, I've written a couple of offers that have been really odd, like interactions with listing agents right now. You know, I think we're all kind of feeling for things, but I like people being super secretive or just so lazy that they just don't care. So it's been weird, man. I'm still trying to figure out how we can get houses for clients, but the prices have been, on average, the ones that we've lost have had, 15 to 20 offers per property.
And we're week 3 into the market.
Yeah.
For this year.
Correct.
Yeah.
Why just California? Look, if you move from somewhere other than California, I want to hear from you too. So drop that in there. I do want to hear from you. Ian, you're having a crazy week?
Man, it's been good. It's less buyer heavy, more listing heavy. I've got like 3 listings coming up this week
Good for you.
or next week, which
You
was
too?
surprising. So I don't know what that shift is. I don't know if it's the whole interest rate thing that's fueling the FOMO, and we'll get to that. But people saying, oh, well, if I'm going to make a move, I've got to sell the house that I'm in, or I don't know. But that's what's happening.
Wow, Adam's got a pretty big, bold prediction here. I like it. I like this bold prediction, though.
What's that?
He says, silly
Ooh.
Federal Reserve, you tried to raise rates in 2018, and look how that worked. Prediction, the Fed gets 1 rate hike in 2022, and that's it. Well, we'll talk to Sarah about rates hiking right now. My week, had a few people reach out to me about listings, got some stuff going there. I'm running into the same thing. We had a client write an offer on Friday, told him, hey, you know what? By Monday, there's going to be probably like 6 other offers, which there was exactly 6. So, and not competitive in that run. So we'll see how that goes. Sarah, you running into a lot of multiple offers for your lending clients?
Yeah, I'm running into oh god, I am on. Sorry. Yeah, I'm running into a lot of multiple offers right now. I am able to get on the phone with listing agents. They're actually returning my calls, which I was surprised because I know how busy they are. But what I've seen drastically from like the fourth quarter of last year to now is that I'm seeing the offer over ask again. I had a client that lost over this weekend because the other offer was $30,000 over asking, everything waived, full appraisal waiver, huge option, option money, things like that. So I'm kind of seeing that trend of going back towards the beginning of 2021 where everyone was offering a lot over asking. That's what I've started seeing on my side, having those conversations.
This is my reel I put out this morning, which didn't get very many views. If you watch me on Instagram, it's that you can't hear it, but it's the one. Are you crying? No, I'm laughing. This is a real take for realtors right now, because So Kevin and Ian both said that it's already super hot. Are you?
Yeah.
Is that what you're seeing?
Yeah. I mean, still not a ton of listings. I know Ian said he's listing heavy, but I haven't seen a lot of new stuff come onto the market. Most of the stuff that we've been going after is, I'd say half the stuff that's been on the market for a little while. It's overpriced still. And the other half is new stuff on the market that we're just, trying to figure out where everybody is. It reminds me of last year. Like the first couple months of last year, we were kind of like, what are we doing? Like, are we doing 20? Are we doing like 20,000 over? Or are we doing 20% over? And I think that's one of the things. For me, I said the offers I've written, and I think I've written like 8 or 10 in the last 2 weeks. None of them I've been able to get any information out of the listing agents. One of the listing agents, he was just basically like, I hate when they say this too. Just come with your best offer. Put your best foot forward. I'm like, oh, wow.
That's what I'm supposed to do?
Oh my God. That is so helpful. Thank you so much for that.
I would have never
guidance.
thought to bring my best foot forward.
Yeah, I haven't been doing this for very long. So thank you for teaching me, a wise agent, with a 30-year.
It's not like my 7th year writing offers.
Right. With like a perfectly blended 30-year-old picture of your face on your business card.
Yeah.
Oh
God.
But anyways,
you should see my business card. It's terrible. I look like I'm 13.
You should see mine. I don't have one. But then they would just give no guidance. He'd be like, well, we're not even going to counter that. The sellers decided they're just going to take the top offer, whatever it is, and just roll with it. So nothing I can do for most people. One guy actually today did give me a little bit of guidance, but they also are playing a game where instead of having a deadline, I think he's just incrementally holding people out.
Yeah.
Mhm.
You're like, hey, if you come with this, now it's the top offer. So then he puts that in front of the seller, and the seller's like, cool, we're going to wait another 12 hours and see what happens.
I don't remember where or who I was talking to, but I was asking about, maybe it was last week, but I'm really curious to see what builders are going to start doing, because the problem I'm still seeing with builders is they have zero inventory, and everybody's looking for inventory. The problem I'm going to run into, and this is a good question for Sarah that we're going to bring up here in a second, is it worth buying a new build right now? Because if interest rates are going to hike up as much as people are saying, in fact, I think I posted another one today about, where was it? Where did I put it? Post. I put it on my stories. Where's stories at? I don't even know how to use Instagram. On my stories, I posted, it was a graph of what the interest rates think they're going to do. And already Fannie Mae and Freddie Mac was like not even like close to what the rates currently are. So definitely interesting. Let's break into that question, right? Let's break into, are we going to see crazy rates and what we're seeing for rates? But as if you're seeing already right now, it is crazy business when it comes to writing offers. Is it my imagination, or prices, existing homes diverging from new builds, seeing prices cut and existing and new build price rising? That might be your imagination. But Sarah, so walk us through it, Sarah. What's going on with interest rates?
Yeah, sure. So basically what's happening, like everyone saw this huge, like we knew interest rates were going to increase this year, but I think what shocked everyone was the level and the quickness that those increases happened. They're already above what we were thinking like that max would be for this year. And one of the big things that had happened is that in January, the December Fed minutes came out. And I think it was a shock to the majority that doesn't track this type of thing, what the balance sheet was and the talks of the balance sheets during the Fed meeting in December. And I don't think people realize that we're $8.8 trillion in debt, and 8.3 trillion of that is from buying mortgage-backed securities and bonds. And so that was the buying to help keep rates low, to help keep us out of a depression and all of those things when all this started happening. So the conversations that the Fed actually had in the detail of the Fed minutes of what they're planning on doing and kind of the escalation talks to try to get out of the inflation issue, I think scared a lot of people, and it heightened the response. Bonds don't like inflation. Inflation is a lot worse. The Fed basically like put off handling the inflation issue. They kept calling it transitory, which is very familiar to the issue we had back in the 70s. And so now that they're addressing it, what came up was, we all knew they were going to taper, but now they're tapering more quickly. So originally we thought that would finish up in June. Now it's going to finish up in March, which means that the Fed is buying less of the mortgage-backed securities to keep rates low. And then that prevented, because they were buying those back, nothing was running off their balance sheet to get that debt down. So they have to get that down to help combat inflation, which also means the Fed rate needs to go up. They need to increase that federal fund rate. They came out saying they're not going to do that until tapering's done. So now tapering's going to happen more quickly in March. Now they're talking about raising the Fed fund rate probably in March instead of June, which was the original thought. And so all these things are happening a lot more quickly to help combat inflation. And it was basically a worse situation than everyone thought it was. And the news grabbed hold of it when those minutes came out, and it just kind of escalated from there.
So what are today's rates?
Sure. So I actually pulled like end of day pricing on like a primary residence so let's say like 20% down primary purchase, like 600,000. So today you're probably looking somewhere between a 3.875 or a 3.99% for a primary resident purchase.
I'm sorry, say that again.
3.99, like 3.875 to 3.99 for a primary resident purchase with 20% down.
That's like back to January 2020.
It's yeah. So we're like back into like end of 19, January, like 20 or beginning of 2020. Well, I would say 2019, to be honest with you. I would say that 2020 was actually even better because it started decreasing before everything happened. But if we were looking at like in comparison, right? So I went ahead. Those all have points. I'm talking about no points.
I get you.
You got to explain that. You got to explain the no
Sorry,
points.
sorry.
I saw this girl on Instagram talking about how blah 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 blah, like, oh, this person said, and I'm like, girl, you aren't even telling people, like, and I finally saw people in the comments like, are you talking about points or not? And I'm like, yeah. All right, so
sorry, that
go ahead.
advertisement or that video on Instagram makes me so mad. And it's funny because people other LOs finally started putting on there like, can we report this? Like to like the but anyway, so basically those are the points I'm giving you is the rates that I just put out there are with no points, which means you are not paying money for that rate. When you go on to a lot of online lenders and really tiny print, it will have like, oh, this is with paying like 1 point, which is basically a percentage of your loan amount. So it's paying money to get that lower rate. So so basically I'm giving you what that rate will be without you paying points to get a lower rate. You can still do that. But this is just par pricing, which means no cost to you, the borrower. So I went ahead and did comparison for like, let's say fourth quarter of 2021, we're kind of looking at 2.99%. So if we're doing a $600,000 home with 20% down,
when was 2.99?
it was let's say November of 2021. Okay.
So I put up right here 3.25 just to make a comparison. So you're saying 2.99 was in December. Okay. So I use this. I don't know if anybody else uses this, but I use Mortgage Calculator. Every time I have a client like asking questions about mortgages, this is just like a really quick, easy tool. So mortgagecalculator.org. But I like this because you can put in the property tax. So anyway, sorry, go ahead.
Yeah, no. So basically, I'm just going to go with the principal and interest. I'm not going to put escrows in there because taxes, homeowners insurance, all that is going to differ. So I'm just going to keep it easy with the P&I, which is the principal and interest payment. So for 20% down on a $600,000 home, when things were at 2.99, your principal and interest payment would be $2,021. Okay.
So you're looking at, so I just did quick math on here. Okay. Mm-hmm. So just to make it easy and visual. So if you're at 2.99 versus 3.89 right now, 20% down, everything the same, you're looking at a difference of about almost $300 difference in your payment. 289.7. This is just based off some easy math here. $50 HOA, $10,000 a year for property taxes. So you're talking just because they've gone up a whole point, you're looking at about $300,000 or $300 difference. But here's the crazy part. The percent down changes quite a bit too. No, it stays the same, but it doesn't get you as much.
So the percent down for certain home prices will change the rate significantly, especially on investment. And I can get into that later. Like, honestly, if you're buying an investment property right now, you don't want to put down anything less than 25%, just because there's pretty much like a half point difference in rate on in most areas.
Because I'm buying an investment property and it should have closed last year, which I would have gotten probably 3.25 is what you had quoted me. Mm-hmm. So buying an investment property now, let's actually do the math on it. Let's do a fun exercise for Jeremy. What are rates for investors right now?
So if you're looking at a 25% down payment with like a 740 plus credit score, and again, I did this off the 600 purchase price, but you're looking at about a 4.5 without paying points.
Oh, okay. So, all right. So Jeremy is buying a property that closes in March. We'll call this 7,000 for fun numbers. HOA, that looks the same. No. Okay. So my mortgage on that property, 7,000 a month, 25. What did I do wrong here?
And as a blanket statement, there is a lot that goes into an interest rate. So these are estimates just to give you an idea, because the basic number concept, especially of like a lower rate and a higher rate, should still be there. But I mean, you have your credit score, you have the type of property, the type of loan, there's lots of down payment, things that go in there. But this is to at least give you a good idea of what that difference looks like. I just have to put that out there.
What's up, Amber Life? Man, this is depressing. This is depressing? What are your thoughts, boys?
On the rates going up?
Yeah, what's your thoughts? What do you think it's going to do to the market?
So one thing that I noticed is last week, 76 homes were listed. Last week, also, 483 rental homes were listed. That's huge. It addresses kind of a lot of what we were talking about. Do we think it's going to become like kind of rental heavy? And I think that's it's a big deal. I do want to say that a lot of people were trying to do this knowing that the interest rates were going to rise.
Yeah.
Interesting.
Well, I do have a possible silver lining if you want me to talk about it.
Yeah.
Yeah.
So basically, I kind of talked a little bit earlier about how bonds. Oh no, something got unplugged.
Bye, Sarah.
Bye.
Sarah.
We still hear you.
We can still hear you. It's
Okay, well, I'll talk and then I'll figure that part out. So basically, bonds hate inflation. So once we start combating the inflation issue, meaning once we're done with tapering, once we have the federal fund rate hike, and once we start tackling the balance sheet runoff with the Fed, then rates should start going back down. Now, the question is, where will rates be when they start going down? So, are they going to stay here around like 3.875, 3.99, and then go back into like the low mid threes? Or are they going to go up, to the fours, and then we're going to be back down to like mid threes to where we're at now? So, but the thing is, once we start combating that issue, then we should see rates start coming back down. Oh,
So Ian, okay, so say that again. So you think rates, even though they're at almost 4% now, they're going to be coming back down, is what you're thinking?
sorry, I'm trying to combat my camera issue. I really don't know what happened.
That's what Sarah was saying, but I
Yes.
I like why she thinks that. I like the justification.
Sorry, I was trying to pull up how many homes we actually have on the market, so I wasn't fully listening. So on the market currently, we have 20, not even less than 2,200 in our MLS. I did a whole video about should you list your home, and I just posted it this week. Or is 2022 the time to sell? I'm looking at how many homes are on the market, and I'm like, now there's a lot of demand. I mean, you guys are both writing offers for people and in multiple offers. So, I mean, imagine there's 6 people, 7, 15 people writing offers on each one of those properties. Yeah, man, it's pretty tempting for me to list my investment properties. But the problem is, where do I stick that money? Is it NFTs? Is that what I put it in, Kevin? Lord Kevin?
I am not a financial advisor.
Yeah.
Don't put in the stock market.
I mean,
yeah. Oh my gosh. Talk about a tank. Oh,
I don't know. I actually believe this is going to sound like an unpopular opinion at the moment, but my conviction, I'm trading NFTs right now, like speculatively, not holding much for the long term. I actually am liking cash positions at the moment, if I'm being very frank. I think having at least a little bit of your portfolio in a cash position at the moment, I think there are a lot of good opportunities in whatever investment class you're interested in, whether it's crypto or NFTs or stocks or options or real estate or whatever. I think you'll be happy if you have some cash available to jump on some opportunities in the next 3 to 6 months. That's just my personal opinion.
I actually have a
It's not-
little, I don't know if you want me to share it, Jeremy, but I have a little
Sure.
recap on the pattern of inflation over the years
Go for it.
with mortgage rates and how when we combat the issue, it typically leads to, a decrease in the stock market and also a recession. And that's kind of what I'm, right now, things are projecting if we continue to go this way is kind of hinting that we're going to go into a recession.
So does
as well.
a recession mean we have in Austin a market crash?
No.
What does a crash mean?
I love recessions if that's what's going to happen. So
I don't think so. I mean, look at even when we had 2008, like we didn't see that big of a hit in Austin. I think there's way too much demand, way too little supply, and way too many companies moving here and working here and jobs. It just doesn't, I don't think that other places will probably get hit harder. But if we do have a recession, I don't think we're going to really feel it too badly here, personally.
I don't disagree with that at all. Yes, put it in metaverse real estate.
Well,
Agreed.
It's interesting. Do I have it up here? Do I have it up here? My wife has this weird accent every now and then. She's Hispanic, which is weird.
She turns British.
Yeah, she's like, can you put that away? I'm like, what are you talking about? So I made a little graphy graph about like what's happened with pricing. And this is the Austin pricing. So let's say we stay flat and don't increase in January, right? Or end up closing prices. Look at this. We're still $100,000 more higher just for Austin than we were last year. That's a pretty big percentage over. And here's the MSA. The MSA is almost recovered from our highs at 482. If you look at that, that's pretty damn close. Mm-hmm. So I'm making a bold-ish statement and saying that the market crash, Realventure was correct. The market crash was in 2021. There you go. It was in 2021. Now, if the market crash is over and you didn't buy in the dip when I told you to buy in September, go back. I made videos. This is the time to buy. You're screwed. Property tax. I mean, here's the other thing we haven't talked about either yet is property taxes. Who thinks property taxes are going down this year?
Wait, no.
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 I mean, that's another video that I'm going to be putting out in the future. Obviously, is property taxes. I mean, we saw mine went up $1,300 last year. How much did yours go up, Sarah?
Actually, so I bought my taxes, and on one of my properties, it actually got down. I won. Nice. And then the other one, it stayed the same. So it went up. It didn't go up as much as I thought it would, honestly. But that was my Hayes County, not my Travis County property. So.
Yeah. So you're saying it's easier to fight your taxes in Hayes County versus Travis County. Smart.
No, well, actually, no. My Travis County one was the one that got down. Somehow.
Oh, so that was your South Austin house?
Yeah, and then the Hayes one, the taxes didn't rise as much as I thought it would. We didn't have as much of an increase. That's what I meant.
Got it. Okay.
We were lucky, I guess. Don't find me.
Yeah, you don't know where she lives. She's got multiple properties. Ian, did you guys see a lot of your clients' properties go up? So typically in May, when the property values come out, everybody hits me up for comps to help them protest their taxes. I mean, how many people did you see like going, whoa, this is way higher than I thought it was going to be last year?
I'm going to say 80% of people that got new builds that that didn't know, right? Like I really try to drive that message home. Like this is not your price point. I make sure that any lenders that I work with, Sarah, right? Like you're going to educate people. I don't work with people that don't try to educate people. Right. So, but yeah, that's still a hard hit.
So I beg to differ with this comment, Clay. So yes, the property tax rate has gone down, but they're still increasing the value of your house. So you're actually, while the rate might be going down, your taxes aren't changing. Yep. They're still going up, right? So if I reduce it 0.25%, but I raise the value of your home 30%, there's a cap at how much they can raise it at 20%, but your taxes are still going up. They're not going down because the rate went down.
Like, is
They're
your monthly payment going down? No.
No.
But I don't know that. I mean, I understand what he's saying, though. He's not like saying that it is.
Right.
He's
So
just
property
saying that
tax.
the rates have gone down, which is awesome.
Yeah.
I mean, they have, and that's another reason to move to Pflugerville. But if you're buying a new build in Pflugerville, Blackhawk's still 2.99%.
Listen, I'm not going to be. I'll never.
No. There are sections that are like 3.2.
It's awful.
3.2,
Yeah.
not 2.99.
Yeah.
Not 3%.
I've
Hey,
seen
that
not
matters.
two- not
You just
2.2.
know the math. That math. No.
3.25864.
There it is.
I refuse to move to Pflugerville until every business that starts with
Okay,
the
we're
F
on the same page.
changes to
Never
PF.
mind. Sorry, Clay. We're on the same page. I apologize.
I do feel bad though. So actually, there was an interesting stat that came out this morning from the National Association of Home Builders, and it was that the amount of the percentage of last year of homes that went under contract but failed to start was 44%. So, which I thought was a huge number. And so it's like, so a bunch of new build contracts that, went under contract, but didn't actually start the construction process was at 44%.
Well, I mean, I'll let these guys jump in, but this is something I've been complaining about a lot. You have all these channels out there and all these statisticians saying, well, look at all the new build starts. That's why Austin's going to crash. Gentlemen, you want to explain to the people what actually happened?
Yeah, I was on the phone with a guy today, one of my clients, and he was supposed to close in November, and we might make April. We might.
Oh, is that the guy that I texted you about last night?
Yeah. Yep. He was like, they're telling me March, but they've been telling me, next month, every month since our original closing date. So yeah, he was like, they're telling me March now, but I think it's going to be April. I'm like, I'm probably with you. Depends on when they install cabinets. He's like, I've never heard of it. I have no idea when that'll be there.
That's my new question of people because I have a lot of people like, oh, my new build, I think it's going to close. I want to lock in a rate. And I ask them, have cabinets been installed yet? Like, because, and even then that's not a good, that's a good indicator, but that's not the ultimate indicator. Cause I have folks that are supposed to close last summer that just got framing done. And
that becomes the next question. How many people that are working new builds? I've got like 20 new builds going right now, right? How many of those are on time? My answer is maybe one.
Not one. Not one of mine has been on time.
Yeah. They've got reasons.
Well, and then now to kind of tie it back into the rate issue that we're talking about, what my concern is if you have someone that has a new build, right, been under contract, waiting like a year, maybe more to get this home closed. And what if they were already tight on their debt to income ratio to qualify? If now their payment's going up $300, they might not even qualify for that home anymore.
Well, I mean, here's a prime example, right? Well, here's a prime example. So my investment property that I'm purchasing, the new off of, what'd you say, 4.5 for investments right now?
Mm-hmm.
So I'm good credit, all that good stuff. My mortgage now is now $1,970. I was putting in a little bit more as far as what I was anticipating it actually doing. Here's what Sarah quoted me when we put it under contract. $1,793. So $200 more is what I'm going to be paying on the mortgage just because interest rates have gone up. And I didn't do anything different. And I'm sure the tax rate, the tax rates on this house are super low, but hopefully, they go even lower. So anyway, my apologies. Continue, Ian.
No, but it comes to the point that we're talking about. It's just like, how does this factor in if you are under contract? And if you are under contract for new construction, I would say go to whoever your loan officer is and have a chat with them and just see how this affects you. Because if you're far enough out from something being completed, then you have time to save more money, maybe for a larger down payment or something else, so you can get ahead of the issue. So that way you can still have your home. But I guess I kind of think of like that ABC, right? Like I want to solve everybody's problems. So, but yeah, if you're worried about it, I would say talk to your loan officer, make sure that you still qualify. And then if you don't, like, what is that difference you have to come up with to get there? Is it paying down some debt? Is it saving more money for a larger down payment? Because you probably have time to do it since 44% haven't started being built yet. Sorry.
So that begs the question, right? So you said potentially rates could come down. You know, you gave some gypsy math there. I'm just kidding.
What say that?
I don't think is that can you use the word
term.
gypsy? Is that not
that's a derogatory term now.
It's a slur.
Is it?
Yeah, I know, right?
My apologies to the gypsy community. So you did some crazy math. How about that? Not that gypsies are crazy, because I wasn't making that parallel, but you did some crazy math. What were you? So go back to what you said. You said that rates could come down because of why?
Oh, because once we start combating the inflation issue. So once the Fed is done with their tapering, once they've actually started the Fed rate hikes and they're addressing their balance sheet and have the balance sheet runoff, at that point, probably after the first rate hike, maybe it will take to the second rate hike, then we're probably going to see interest rates start coming down because bonds hate inflation. So if we're combating that inflation issue, because mortgage rates are based off the bond market, they're not, and mortgage-backed securities, they're not based off of the federal fund rate. That's totally different. So federal fund rate is more like dictates like credit cards and short-term loans and things like that. So anyway, once we show that we're actually taking those actions, we've completed actions to combat inflation, inflation starts coming down, then we should see mortgage rates start coming down as well.
Okay. So when is that?
So right now.
How about this? Let me ask you this question, Sarah. How much higher do they get before that kicks in and they come back down?
That is the big question. Like, so that is the big question. So like I said before, we were thinking that they would go up to the high threes, kind of like as that max. Or if you not have great credit, or if you have investment property, it'd be the fours. Huh?
You just said they're already at the high threes.
Right. So we didn't think they would be up like this high this quickly. But no one's to say how high they're gonna go. I think honestly, we're probably gonna stay around the high threes, low fours. I don't know how they could get higher than that. Again, this is if you have like really good credit, primary residence, things like that. There's a lot of factors go into it. Best pricing. I'll say that. Best pricing I see going up to like high threes, low fours. I think when we're going to see possibly the rates start going back down is going to be like the second half of the year. So
second half of the year might be better time to buy.
Yeah, or if maybe you want your builder to push out
Sarah,
to not complete until later.
Can you share what will get you best pricing so that people understand that tier? Because I have a lot of people say, well, my credit score is this. And I'm like, after X point, it doesn't even matter. I mean, it matters, but it doesn't really matter. So can you share what that is?
Yeah, sure. So what goes into best pricing, and again, like sometimes different lenders will have certain tweaks here and there, but generally it's all kind of the same. So you want to have like a minimum of a 760 credit score. You want to put down anywhere from like a 20 to 25% down payment. Usually if you put down like a crazy, like 45, like a very large down payment, you can get it even lower, but that's just rare. That doesn't happen as much. So you want to do like 20, 25% down. You want to have at least a 760 credit score. We're looking at a primary residence. We're looking at like usually a conventional loan, like 30-year fixed rate loan. So that's usually what goes into those factors. And one unit.
Yeah. And the reason why I say that is because I have people that are saying, oh, well, I've got like an 810 credit score, so I expect an even lower interest rate. And it's like, that doesn't really work that way.
No,
hey, but that girl on Instagram said you can get really low rates.
That's true. She did say that. She did.
If you want to pay,
she's going to be on TikTok next week saying the same thing, right?
Yeah, she's probably on TikTok. I'm not on there yet. A poll question for the group: should I be on TikTok? There you go. Poll question. Can we put up a poll? Anyway, so talking about new builds, here's the lumber futures. I mean, lumber futures are getting close to the peak of where they were. So I think it looks like they came down a little bit today, but geez. So lumber costs are part of the problem, right? Still. So the question I have, is it worth it to buy new build this year or to put one under contract?
What else are you going to buy?
Who are you asking? Because
General question. There's a lot of people that are looking. So, I mean, look at the comments. In the comments, you have a lot of people saying, somebody said, I put one, they want to bid in, what did they say? They want to bid in Parker.
The ranch.
Yeah. So, and then you have other people asking if they should be even buying right now in the comments. So, or where rates are going to go. So the question is, should you buy a new build this year? Jason Walter, I think, put a video out yesterday or today asking that same, or saying you shouldn't. So the question is, should you be buying new build this year?
Parkside, that's what it was.
Parkside, yeah.
Do you need a house?
Yeah, I was going to say, I like Kevin's typical answer in this scenario. And he says, where else are you, like, where are you living? Where's your money going right now? And do you need one? Right? Because every situation is a little different. And I would say if you still need a house, and it depends. So a lot of builders are back to giving some sort of incentive, right? Mm-hmm. So if you're in a rate that doesn't have a, let's say it's not a really high taxed area, the HOAs are reasonable, you don't have a house right now, and you can get these incentives because you're not disciplined enough to be able to save what you need, or not capable because you don't have that kind of income, then it could be the only way you get a house.
I feel that maybe, I 100% agree with you, Ian. 100%. That's the same questions I would ask. But no, and also,
well,
I think
let me revise my question then. Should you be buying new build this year if you're already close on the payment, knowing you're not going to know what the final payment is until you're about a month out? Is it worth it then?
I got a different answer for that. I'll come back.
I think that it's our job as real estate professionals to look at that granular of a level, but most people don't give a shit. So once they get into their house, as long as they can afford the payment, they actually could care less what the interest rate or the tax rate or whatever it is. They look at it and say, I can afford this payment. I don't care if it's a 9% interest rate, right? I'm only going to be in this house for 5 years and then I'm going to sell it. So I just don't care as long as I can afford it. And then if they already hated the house, they're going to hate the house 24 months or 48 months from now anyway. But if they love the house, I promise you, they're not going to every month pull out their numbers and be like, I can't believe that I paid 4% interest at this or a 2.75 tax rate. I just don't think people are. So my point to that is buy the house that you're looking for right now. Waiting is always unknown. Think about the people that waited last year till this year.
If they listened to us when we said to buy in September, they'd be in good shape.
I have a client
and they would have got a cheap rate.
I had a client that purchased 3 homes last year. And even last year, during the time that they purchased these homes, you're like, wow, am I buying at the top? Now we're trying to buy another house here recently, like this last week. And they're like, hey, we're confident that we got good deals last year. And at that time it was the peak. So like, this just doesn't, I don't know that it ends, anytime soon. So like if you're in the market for a new home, the cost of the alternative, are you renting right now? Are you in another house that you can get equity out of? Would you rather get that equity out right now while the getting is good and move into your next house, or wait for the unknown of who knows what's going to happen a year from now? What if interest rates are, 6% next year when you're ready to buy or whatever?
And where are prices too?
Like if you buy a house now and the rate's a little bit higher, eventually rates are like it's cyclical. You know what I mean? Like it's not, or you could be like, okay, this isn't for me and sell. But I would say the point is to look at the big picture and have that conversation with your client. And it's almost never a bad idea, I think, to invest in real estate or invest in a home, because again, you're building equity in something. And if it makes sense for you, you're in love with it, you're happy with it, like what Kevin was saying. And some people, as long I know that I have that conversation about, okay, here's where your payment is, here's where it's probably going to go, just so you're prepared for it. But a lot of people that I talk to that didn't get off the fence usually regret it. I very rarely have people that are like, oh, I'm so glad I didn't buy then. Usually it's like, oh, I wish I had bought. And that's a lot of what I'm hearing now from people I was trying to get off the fence over the last year and a half, you know, and now they're in this situation because they thought rates were going to go back down because they wanted something in the low twos, mid twos again, you know, and it's just like, that wasn't realistic. But you have to go through that, I think, to learn.
I think my strategy would be this. If you need a house and you're worried about the interest rates, then you target the builders that don't release product until they're a month or two from completion. Sorry. Like you focus only
but you're
on
going to
that.
bid on those too. Most likely you're going to bid.
Some of them, yeah. Others, if you're
Most of
first in
them.
line or you show up, but that's the thing. You have to be in a position where you are pre-qualified. And I say that because you don't know unless you've already, you know, unless you're up on your numbers, but you want to be ready to make a decision within 10 minutes of seeing the house and the floor plan. And if you can't move that quickly, then you might lose it. And it doesn't matter. Like, even if you're not bidding, man, I saw this house. It was in Georgetown, and there was an open house on a Sunday afternoon. There were seriously 30 cars in front of the house. You can't move that quickly.
Sorry.
Oh, I was like, what is that? So yeah, if you can't move that quickly, then you need to.
Well,
you need to
and
adjust your
that's the thing
strategy.
that drives me nuts about. I mean, I get people that reach out to me and they go, "Okay, Jeremy, I'm coming out this weekend to look at homes." I'm like, "Okay, great. Did you get your pre-approval yet?"
Yeah.
Well, no, I'll get it. You know, if I find a home I like, I'm going to get my pre-approval then.
You mean you're going to lose?
You're going to.
That's what's going to happen. You're
Yeah,
gonna lose.
you're going to,
and you're not going to get a house, and then you're going to
it's
say it's
frustrating.
our fault.
I'm
And then
okay
I
if you
get that
do.
call. Sorry.
I'm okay not to do that though. I'm okay. I think it's okay to do that. That's where we diverge. I've diverged a lot in real estate businesses. I don't care if you have a pre-approval or not.
Right. Like it's not supposed to be an impulse purchase. What I'm saying is, if you have a plan to come out here, what's the harm in understanding what you're getting yourself into before you come out here? I think that's Jeremy's point.
And especially if you're relocating, there's a lot of differences. Like our property taxes are higher, our homeowners insurance is higher. Yeah. So what you think in your mind from your experience, wherever you come from, you're like, oh, my payment's probably going to be around here. I've bought a home before, but it's going to be actually completely different because our rates for things are different out here. So I think it's having that understanding too. So you're not wasting your own time and then also your real estate professional's time. And it helps when I don't get calls at midnight and saying I need a pre-approval. I'm looking at homes tomorrow morning.
Well, and again, we talk about this a lot. It's a different property tax rate almost per neighborhood. So what you think you know may be incorrect unless you really know. And who's to tell you that?
Well, that's like in Dripping Springs, you have anywhere, I think, from range of like I think it's 1.98 to like 3.2.
Yep.
And, you know, it just differs. It's not just like, okay, this specific area. I mean, maybe like the specific neighborhood, but it's not like, oh, Austin blanketed, you know, Austin. And it does make it more difficult if you are particular on that. I think, though, the good part was with how competitive things have gotten, people aren't as particular that have been looking and been part of the market. I think a lot of us have educated them. Like, if you like a home, know your numbers beforehand.
Well, I'm not saying if you're going to just drive out to look and see if you want to move to Austin. What I'm saying is if you're coming out here and your intention is to buy a home, you're wasting your time if you don't have a pre-approval. Like, I get it. Come out here and visit and make sure you like it. I'm not making that. But if you're coming out here to potentially buy a home, you probably should have that in your pocket.
I've had multiple clients in that situation. They come here, they look, they get back, and they're like, okay, we think we want to do it. And they've lost everything that they looked at.
Kevin, you want to come at me, bro?
No, I was just thinking that like interest rates and my mullet have followed the same trends.
Yeah.
It's gotten longer.
My mullet's back at the interest rate that it was previous. I cut a ton of it off. I just get so tired of it. The other thing I was thinking is like, if you're not happy with the interest rates, like you can wait till they're 6% next year, and then you can refinance at that time to 6%. If you remember, it's a joke.
Can rates go up to 6%?
Yeah, they used to be up at like 8. I think the highest was like 18%. Like
my first house in well, I'm not going to say what year it was. My first house was 6.25. And I was happy. Actually, I didn't care. To be honest, I didn't care. She said 6.25. Like, I don't know what that means. How much is the payment? So, okay, I can afford that. My first house payment was $750 a month.
Well, I think like another part of this too is that usually when rates go up, like prices of homes go down to kind of help balance it out. And that's not something that's happening or something we're probably going to see because of the complete lack of supply. And so I think that's what's the only thing that's going to be an unusual tweak is that we're having prices are going to keep going up because of the huge demand and lack of supply while rates are also increasing. So that'll be interesting to see how that works out.
There's nothing on the market right now.
So
I mean, I just showed it 2,100.
Who just asked that?
Frustrated. It's so
how much? How many did you say? 2,100, right?
There should be 4,600 or 5,000 or something.
2,100. So I showed it on my Instagram. I showed this. This is.
I can answer Carlos's question when you guys want me to.
Yeah.
Who's Carlos? I'm just kidding.
Well, and I've
Carlos,
got Joe's question. I think it was Joe.
So
Joe Mama.
Sorry, let me get this where it's dairy. It doesn't even help. Oh, sorry. We're gonna have to get rid of everybody. All right, full screen. Come on now. All right. So here's my point: is that the January stats for 2021 was 0.4 of a month inventory, and we were probably about 2,800 units back then, if I remember correctly, around there. And then in January, we were at like 33, 34, and we're down to like 2,100. So we're probably back down to 0.4 month inventory. So basically, I feel what we're going to see is this whole thing all over again. It's just property taxes will come out in May. People will start getting scared, throwing their homes on the market, and then the numbers will start to drop off once we have more inventory. But then will that inventory go away? Will it come back? Like, what's the deal there? So I don't know.
So someone asked how many are if you remove new builds, and the answer is 1,500.
Correct.
It's like half.
But
no, that's 25%.
I thought you said 3,000.
Last time I did the math,
no,
it was
2,000.
Like
2,100. 2,000. Sorry.
So here, let me show. So okay, so here's everything. It's 2,100. If we look at new builds 2021 plus 756 units of 2,000. What is it? So what is that? 756 divided by 21.
But you don't have new single family.
35%. Yeah, well, I mean, okay, but
just
you asked if they're new.
Yeah.
So 692. 692 divided by 2120. But 2120 isn't even just single family. So if we go single family just on the market, and this is all of our markets, 1,800. So yeah, it's quite a bit. That's nuts. That's nothing. Well, Kevin got mad at me. See ya, Kevin. Come back soon.
Would you want to do 2022 plus, not 2021 plus?
No, because some of the builders still have it as 2021 on their.
Oh, if it's been pending. Yeah, that's tough because if it was started in April.
Yeah.
And that's dumb. I was just doing anything before 2022, so it might be a 19-day lag.
Yeah, I mean, if you look through this in look at it, a lot of them say June, July build time. So maybe not all of them, but quite a few. Jeremy, I would love to get your take on the Great Reset. You will own nothing and be happy. I feel a large portion of the population is being left behind due to inflation and demand. I don't know or pay attention enough to the Great Reset. What I do see is that I mean, I did a whole little reel about it the other day that you have California companies coming in and buying Texas land and turning them into just straight rental properties. That's it. 320 units rental or 230 units rental properties. That's crazy to me. Good for them for doing it, but do I think that that's what's going to happen? Probably not, but it's interesting to think about. What's your take on the Great Reset, Kevin?
What, that it's going to actually happen?
You think it's going to actually happen?
No, I don't think it's going to actually happen.
No. Well, here's the question. Cracking beers over there? I want some beers.
Yeah, banana beer.
Nice.
Banana for scale. Ring, ring, ring.
How many bananas is Kevin's mullet?
Why do
10%
we?
more than this. What?
No, I mean, I don't know. I don't know exactly that I formulated a proper response for that. That's a pretty deep question.
That is a deep question. I don't know. I mean, I hear people talk about the Great Reset. I just haven't paid attention to.
Okay. Let me just say this. I don't disagree that, like, I think owning in real life is probably not, and I'm not talking about 5 years from now or 10 years from now. I'm talking about 20 or 30 or 40 years from now is going to look a lot different than what it does today. And I do believe at the pace that we're in right now, most people like Gen Z, I'm sorry, you guys, it's going to be way tougher for you guys to buy a house. It's just the reality. You know why? Because boomers already started this snatching up properties, snatching up the best land and building it into properties that they are renting to millennials. Now, millennials have to earn way more money in order to buy a property that, and trust me, I'm in this boat. I'm looking to buy a property. And every time I finally feel like, okay, I'm, on the ones that I really like from a private residence, by the time I'm like, okay, cool, let's go ahead and do this. Then something comes up. I end up spending my money on something else, like as an investment property. And I come back and circle. I'm like, that opportunity is gone. Then you have to recalibrate the type of investment that you're willing to make and either pay more money for the same house or get much less for that. It's going to get to a point where I do believe Gen Z is probably going to be renting a lot longer and getting a lot less. But the cool part about that, what I noticed is that, people are appreciating more the lifestyle experiences. They're saving their money or they're spending it on something to go do. So the quality of life is a little bit different, owning or not owning. I think it's just a little bit different. So, but yeah, I don't know that one day home ownership will be as broad as it is today, even.
Or as important to people.
Or as important, yeah.
I mean, do you think people younger, this is my biggest beef with college, and I don't want to go on a rant about college, but in high school, you learn a lot of things, but you don't learn how to actually manage your money, hold your money, how to invest. And in college, even in business colleges, you're not really taught to how to help your credit score. You're not like actual life things. And so I find it crazy, but back to my thought. So do you think that more younger people are going to start learning and paying attention to investments? Look, more younger people are getting into Bitcoin, getting into Doge and all that good stuff, NFTs, and learning about this stuff younger. Do you think younger kids are now getting more intrigued into these things where they might set themselves up better, like buying NFTs now and holding on to? Shoot, if you had 100 Bitcoin back in 2013 and you still had it till now, you're probably a very rich person.
Well,
do you think more of them will pay attention?
Well, let me finish. You just reminded me, that's the point that I was trying to make before I got distracted about how delicious this and perfectly ripe that banana was. That the millennials that did happen to get in early into the buying market or even doing it now, millennials are earning a lot of money. Like they're earning a lot. The average, I don't know what the median age here is, but it's definitely millennial because it's tech. And those folks are earning quite a bit of extra money. So if they are buying a property that they're living in, a lot of them also are. I don't know what the number was, but it was pretty high of people this year that ended up buying at least one investment property for themselves. So it's not just that institutions are buying and building a bunch of rentals for people, is that we as our investments, because real estate is a great investment, we're buying additional houses and willing to pay more for those and driving that up. The conversion of even those properties to very profitable Airbnbs has snatched up yet another tranche of homes as well. That has pulled those off the market, where normally those would have been purchased and lived in by, like, that didn't exist 10, 20 years ago. That's like a complete, buyer of a bulk level of real estate that didn't even exist before. So yeah, I agree. I think in future generations, 40, 50, 60 years from now, the investments that they're making, I would see somebody being happier investing $50,000 into a very nicely curated metaverse NFT ownership property where they spend most of their time anyway, and living in a smaller space, in a bigger city. That's what I think is probably going to happen.
I mean, this is a good point, though. This is my whole point about Bitcoin. Had you bought Bitcoin and just held on to it, but the problem we all run into in life is, I have multiple properties and I'm looking at them going, God, I could make a lot of money selling these homes, but then what am I doing with that money? So the point I'm making is, do younger people start buying things and holding them longer and thinking about the investment potential versus, and you're saying the same thing, you think they will. But I hope they do. I mean, look, I wish I had a crystal ball to know where my son was going to college. If he goes to college, I mean, I've already put so much money in a stupid account, so hopefully, but if he goes to college, I want to know where he's going so I can just buy a house there now, because I know it's going to be crazy in the future. I hope it's UT, but just, maybe I should buy a house in Phoenix now.
I did a deep dive a couple of weekends ago and this is a completely different topic, and this might like whoosh some people, but this is just what I feel about it, is that NFT and Web3 ownership, which is NFT, metaverse, cryptocurrency, anything of that nature. Somebody mentioned like NFTs, the way that they should be used are going to be the way that they're used in 10 years will not be the way that they're used right now. And I totally agree. I think NFT ownership, as far as like pictures right now, is like the least attractive thing ever. It's the least meaningful, which is why people make fun of it, but it was an easy way for people to get in and make money. And that's what happens with a new medium. If you go back in the past when the communication methods were like horse and buggy, or delivering messages by hand. Yeah, carrier pigeon. And then it was delivering messages by hand. Then it was a telephone, and then it was newspaper. There's a life cycle of media. And if you go back, there's studies that have been done and they show what the life cycle of media looks like. It follows the same path. It just maybe is different over time. So the first movers into the new adoption of the media, they're using it for a very specific purpose. Then people begin to realize, okay, this purpose is really good. A lot of people reject it. Some people embrace it. The ones that embrace it usually are revolutionary and they make a lot of money. And then eventually over time, it's very obvious the profit availability on it. So that's when bigger money moves in. It becomes corporately owned, and then they suck all the profit off of it. And then everyone ends up using it because it's, the way we do things, but then it's just going to bigger companies at that point. We're in that cycle, like NFT media, Web3 media. We're in the very beginning of what is new media. That's going to be the way we communicate, interact, whatever, 20, 30 years from now. So, that's kind of the point of all that, is like, we're moving towards that, where eventually it'll just be, governed by the biggest companies, and they'll be sucking all the investment dry out of it.
You bored people so much your camera went fuzzy.
I know, that's what I'm saying. It's like, I can't talk about this because it just like,
no,
I
believe. Look, this channel is a fun channel, and we can talk about fun stuff. So, I mean, I think there's merit to NFTs. I think there's merit to the metaverse. I think there's merit to all of these things, because just like the CD player is no longer a thing because the iPod took over, and then our phones now have all this music. Like, what is the next thing? We could see it, and it doesn't make sense at the moment, but how it's used and how it works in the future is going to be a totally different thing. So I think it's worth looking at, because how many people could have invested in Google early and didn't? You know what I'm saying? Like, I could have bought Google.
Well, let me ask you a question. If I were to ask you when the World Wide Web started, when would you say?
1999.
No, it was like 1975.
Yeah.
So you
But then when it
understand what I
was
mean?
public is different.
We're in 1975 for Web 3, which is NFT, cryptocurrency, metaverse, that whole thing. We're in 1975, right? That's the equivalent to that, the beginning of the internet. The internet didn't take shape until the late 90s. 25 years ago.
Yes, Sophia. Sorry.
Sorry, I'll stop
early-
now. I'm done.
No.
Go get another banana.
But yeah, Sophia, I did say that. So currently for a primary resident, 30-year fix, 20% down with good credit, you're looking at about a 3.875 to a 3.99 at par, meaning no points to pay for those rates. One unit. Property.
I really like this comment because I keep hearing, there's YouTube channels out there saying people's or saying that incomes aren't coming up, right? That, prices are going up and incomes aren't coming up. This is a prime example that depending on the space you're in, people are changing over jobs just to make more money. I mean, that's like, if you think about it, builders are having such a hard time because they don't pay their laborers that much money. And those laborers are getting scalped by other builders and framers or whatever to go make $1.50 more somewhere else, or $2 more. And it's taking longer for builders to actually build homes. It's taking for build roads. It's taking longer. So right now people are going to where the money is. And so I think this was a great example. I'm sorry, I went off the rails, but
there's a really good article though, like Jeremy, like on that comment, what you were saying, I pulled it up the other day. First, because the headline got me because it offended me slightly, but it was like about geriatric millennials. Have you heard this term?
Love that. That's
geriatric
hilarious.
millennials. Nice.
Yeah.
That's
So
hilarious.
so geriatric millennials are millennials that were born between 1981 and 1985. And so what they're saying is, yeah, I'm in there too.
81, yep.
So basically they're saying because these set of millennials have a special type of skill because they were born during a transitory kind of phase of like old school, you know how to talk to people, you know how to interact, you have better social skills, and you can relate to different generations better because you didn't grow up with having, a cell phone, internet, social media, all that from like the older millennials had. So they actually have more skill set and a higher skill set where they can relate to more folks and they're getting paid more. So those are actually the class of folks that are doing a lot of these job changes and getting paid a lot more because they have a better skill set. Oh, thank you.
We're elders. I watched this crazy ass movie the other day. I'll have to remember what it was. I was really drunk watching it, and they asked like what happens to people when they get to a certain age, and the guy goes at 72, like this. And they had two 72-year-olds they shoved off a cliff, and everybody watched them die. And they're like, that was 72. So I'll find this movie. It's the craziest movie I think I've ever seen. It's about some commune in Sweden. If you've seen it, or Switzerland or wherever, if you've seen it, put it in the comments. Yeah, it's crazy. Anyway, Ian, you've looked. We're all going to take a bite of banana. We're all taking a bite of banana. Ian, it's your time to weigh in.
Obviously, I wanted to talk about NFTs. I get really excited about that topic, and
Go
not just
for it,
NFTs.
man. We got time.
So think about it. I still don't think people get it, right? Like when you look at MP3s, right? Remember, you had CDs, and then you go MP3s. And everybody's like, oh, why would I want to do that? Why would I want to pay for something digital? And then everybody started paying for something digital when there was a catalyst, a device that allowed you to understand its use case. And then fast forward to now, everybody's streaming. Well, it's just a transitionary process. And that's what NFTs and digital contracts and social tokens, all this stuff is going through. I just don't think people are seeing it, but it's right under their noses. And it's happened over and over and over. Like same with movies. I think Dinosaur D said something about the worth of it or something. And I'm thinking,
that's the movie, Midsummer. Crazy
Nice.
movie. Anyway, go ahead.
But like, how many of you own or have purchased a digital movie?
Mm-hmm.
Everybody, right? Like that's
Last
an
night.
NFT. Right. That's an NFT, whether you rent it or not. So I actually think that might be the thing. The shift from ownership because of the cost to I would pay more to rent the movie for one experience. So I'm looking at NFT rentals. I don't know, but things like that, right? Like that. It's the.
I'm looking at
experience
NFT rentals
is more
next
important.
to Snoop's house in the metaverse. That's what I'm looking for.
I promise too, like this.
Take Snoop's house in the metaverse. Now imagine like an Airbnb next to Snoop's house in the metaverse. Like what?
But my question is like, do you have to put like the heater? Like if you're at the beach next to Snoop's house, do you have to bring in your own sand and your own heater in your house?
That's
for
what
that?
makes
How
it-
does that work?
You know they made lickable TV screens. Like come on, man. Like this.
Bro.
I spend when I broke my
Snozberries
hand.
taste like
When I broke my
snozberries.
hand, I spent.
We don't
more
know.
time-
Whoa. The story of how you broke your hand has changed quite a few times as well, my friend. But go ahead. You broke your hand.
When I broke my hand, I couldn't go to the gym. I was going to Orange Theory religiously, right? I spent more time working out in VR to stay in shape, and I wasn't paying $200 a month to do it, right? The value was greater to not have to drive anywhere and not pay and still have the same benefit, essentially. I mean, maybe not the same, but close.
And we're even thinking of it in terms of like we wear like today's technology, you're wearing headsets and stuff like that. But like, I mean, listen, stop. We're not thinking 10 years from now. We're thinking 50 and 100 years from now. 1,000,000% Elon's businesses will be a success. I will have an electrode implanted into my brain regardless and not a computer. Right. And I will have an augmented reality chip or you know, like, or I don't know what the word is, lens implanted into my eyeball that I'll be able to augmentedly see what's going on. Like, why are you act like that's not going to happen?
I think next week's episode, we should actually just do reviews of Black Mirror and like how it's going to.
Oh God.
Okay. Let me make a point though, how this relates to real estate, right? Because it really does.
It does.
In both worlds, it relates to real estate. One, there will be there already is virtual demand or real demand for virtual properties that haven't even been released yet. Like you can't even interact with them yet. And already they're selling for tens of thousands of dollars. Okay. Boom. Mm-hmm. Secondly, that type of technology will be used to help you make better decisions about things that are happening in current life. Trying on real clothes, which will reduce the number of returns that a company is going to have. Walking through a house in 1-to-1 scale before you buy it, instead of having to travel into the space. You know, you understand, like that's how it's going to affect your real life. So these are not like, I'm not like just putting stuff out there.
I was doing 360 tours 4 years ago. Yeah, right. That's exactly what it is.
Yeah. Yeah.
I think you do have a point though, because it's like we've seen it like mirrored in books and film and everything else, but there's always been kind of like this foresight of eventually things are going to go to a virtual world and people are going to kind of start maybe living their lives virtually and in a way. But it's like, how will that actually play out? Will that happen? When will that happen? How will that play out?
I think the term that's kind of confusing people is virtual, right? Mm-hmm. And I don't know if I said this on this channel before, but if you are a fan of what's happening in a football game and you are not playing this football game, you're rooting for something that you have all you care about is the experience.
Yeah.
It's just as real because you're getting hyped about it, but you're not doing anything.
Yeah.
At all.
Let me further into that. And this is the best way I can explain to people why it's so relevant is because that's the equivalent of like the television, like the metaverse is like what television was to experiencing media as a book would be to most people. They use they use different medium, but for the same purpose. That's escaping your current life and letting someone else tell a story that brings you into that world. Some people read it in books. Some people let the television do that work. So the difference is how many people, it's completely socially acceptable for you to go home and spend 6 hours on your phone in a metaverse. That metaverse is you escaping real life and scrolling Facebook and Instagram for 6 hours. That's your metaverse. That's just the book version. The real metaverse, the 3D that we're going to get 10 and 20 years from now, is the video version of that same type of escape.
I think you're going to get into another part though, like, is that mentally and emotionally healthy? Because you'll also see, sorry if this is like way off track, but you'll notice how, like, you know, when everyone started living more of their lives online and social media became a thing, you know, there's studies and everything out there about how addictive like a lot of this stuff is. And if we end up surrounding our life with these things, is that going to be healthy? Are we going to see, you know, continue to see higher suicide rates, or is it somehow going to be so intricate, so entwined in our lives? Would it be healthier? So I think a big thing too is, you know, what is that going to do to mental and emotional health? Because we are still human beings at the end of the day. And I feel like we need those personal connections and relationships. Like we need human touch, like things like that. You know?
How many people in the comments, how many people don't like other people? For real. I really do. I love just being around people. But I know a lot of people, my wife is one of them. Don't tell her I said that, but she doesn't like being around people unless she's really close to them.
Mm-hmm.
You know, she likes her friend group of handful of people, but other than that, she doesn't want to deal with it.
Here's what's interesting. So we're talking about the metaverse, right? The virtual world. Meta, Facebook just leased the largest amount of leasable buildings
physical
in all of Austin. So they still need physical space to create their virtual world. So I'm still going to keep my money in the real world buying buildings because
the University of Austin, they have a lot of real rooms. What was that?
Sorry, go ahead.
Oh yeah, University of Austin. So they have a lot of real rooms, but they have a subset of those rooms that are smaller with no windows because they still count as rooms. And some people, if they can't afford, I don't know if it's a pricing thing, but it's absolutely the density of space. And do those people care if they don't spend a lot of time there?
Yeah.
You know,
I just see Ready Player One in my head.
How many people want to go camping? How many people want to live in tiny homes? They don't. Like the space is only necessary based on how you intend to use it. After that,
we could talk about like, I mean, I definitely would be cool going down the mental health route. Like this show will be so far away from real estate by the time
I know.
It's not even fun, but it's true. I understand the point that you're making, Sarah, and a lot of people I think do feel that way. I actually believe that it does the opposite effect. I think the deeper that you get into your meta self, which is the type of self that you can create who you want to be, who you are. Okay, do you really exist in your life outside of the physical interactions that you have with other people? And my argument is yes. I can have a completely fulfilling life, and maybe even more so fulfilling life if I choose to, and never interact with a human being ever again physically in space. I believe there's a lot of people that can have more fulfilling lives by not having to be anxious around them because of the way that they look or the way that they act. They can be whomever they want online in that space and connect with people that have common interests, not just because they're physically around them. So I actually think it's better.
If they make a lot of money in that virtual world, they can buy homes in Austin with it and call all three of us, right? So
yes, exactly.
4 of us. Sorry, you got your limit there.
Your meta mansion.
I'm with Kevin. How many people pay to change the way who they are to make other people happy, and they wouldn't have to do that, or would do it differently or a different scale if they were just doing
other people happy or themselves happy? Who are they trying to make happy?
Well, it's never for yourself. You're not looking at yourself. You might. I mean, you can argue it all you want, but you're not, right?
Well, I almost feel like the reason that the current state of social media, what it has been from the implementation of Facebook forward, is because that it's a fake version of your real life that you still have to interact with. So the reason it's so depressing is because everyone is putting a facade out that we all know isn't true in the real world. So when we see them in the real world, we're like wow,
realtors in
son,
their online profiles.
Yeah, it's like my wife's not nearly as cool as everybody
mine's
else's.
a cartoon.
And
Mine's an
meanwhile,
NFT.
everybody's miserable. I think it just makes it even worse because it's just a lie. I mean, it's not that, making an avatar isn't, but I've made my I've made a lot of really close friends that I have common interests with through the 2D version of a metaverse, which is playing video games and meeting with people in lobbies and having audio conversations with them over Discord or through a game lobby or whatever. Same for my son. He's 12, 13. His closest friends are all ones he has online too. So he's connecting with people with common interests, That's just my thought. I'll stop now. I'm done. All
right. So
interest rates.
Okay. Interest rates. Yeah. So I want to make two more back to the beginning of the video. So a lot of more people on here, a lot of more people. Go down to the main comment section on here. And I want to hear from you. If you purchased and moved to Austin or moved to Texas, did you regret it? And what do you like and dislike about moving to Austin? And then second thing, if you're watching YouTube shorts on my channel, drop a comment. I'm just doing some data analysis on that. If you're watching them, I want to hear from you from that as well. Okay, Sarah. So
yes,
you, how can we learn more about mortgage loans from Sarah? That's a great question. And if you want to hear more about the metaverse, drop questions. So I would hear from you in this chat. Metaverse or loans in the market? Let's hear what you want to hear because this is your channel. So the market's getting crazy. Obviously, earlier we talked about everybody's seeing multiple offers. Interest rates, Sarah's said, are close to 4%, 3.75 to 3.99. She's also, just a quick summation, she's also said that we don't know how high rates are going to go, but they should come back down. And she used a lot of, I can't use the word I used, but interesting math to get there because apparently I said a derogatory term. Who knows? So there we are. Loans. Should people? So here's a good question, Sarah. If somebody is under contract on a new build now that's closing in June or July, should they be locking in rates? And should I have locked in rates a while ago?
I did recommend for you to lock in rates.
No, you did not. You said
I did.
You said no. You told me not to lock in rates. I'll go back to the phone call.
I recorded it.
I recorded it for this reason.
So if your home is scheduled, so this is the thing that I do that not everyone offers. So I think that's kind of a hard question. I would say that I'm on the side of being protective over I'm conservative. So when it comes to interest rates, and if it was my home and I wanted to lock in a rate, so what I would do is if I had an option to lock in an interest rate now, that would cover me to that period. I would do it. And then the worst thing that can happen, and it depends again, talk to your loan officer or your lender about this. But if rates start going down, then just cancel that lock and then wait whatever term they have and relock it. Or, what I do is we have a float down option. So if it gives that person an extra safety net. So if for some reason rates do go down, we can float them down to the lower rate at no cost to them. So it gives them like an extra cushion. So I would say what I've advised people.
How long can you lock?
How long? So again, that depends on your lender. Every lender is different. I know personally we can lock, we have extended builder lock options. So we can actually lock up to a total of 300 days, which is pretty significant.
That's almost a year. I mean, that's how many months? Okay. That's 10 months.
But there's different like cost or rate increases associated with those depending on what you're doing. Cause like there's like up to a certain point, there might be like a fee associated with that, but it might make total sense because you would pay way more than that in points to try to get the same rate later. So that's when you need to have that conversation with your lender to really look and see what the cost benefit is and what would benefit you. And does that make sense to do? And that's when you strategize. And that's why you really need to have a good lender that will strategize with you, not just go online shopping for rates and click something.
So, I think the question here is how much time in advance can I lock? You said depending on the lender, up to 10 months. What conditions have to be met? That's a good second question.
Got it. So you need to be under contract to be able to lock in an interest rate. So you need to be under contract for a property, and you need to qualify for the home. And then and that's pretty much it. I mean, and then you just agree on the terms with your lender on what that extension looks like. It's typically going to be like a fee associated with it, or there might be like a interest rate increase for that extended lock, but it could make sense for you if you think that if you're betting on interest rates going up even more.
Cool. Brother Ted says that he bucked the notion that and bought a high rise in 360, rejecting all the we're in a real estate bubble cautionary tales. I have no regrets so far. So good thing you bought it then, because interest rates from December to now, they stark difference.
And I tried to buy I looked to buy a condo. Like, remember I told you last year there's one I was going to buy at 70 Rainy for 365, a studio, a really small one. I did a search 2 days ago. There's nothing under 550.
And here's my biggest problem with condos is just the HOA fee.
I have no problem with this. I have no problem with that at all. With the access downtown. That's my personal.
Okay, that's two separate things. In my mind, I'm thinking from a financial aspect. Because
yes, from an investment standpoint,
that's my difference. But yeah, if I could get that same condo close to downtown without the HOA fee, I'd do that, and I'd pay more. Mm-hmm. But what's the difference between locked versus fixed rate loans?
Sure. So it's actually two totally different things. So when you say that a loan is locked in, that means that you've locked in that rate, which means that that rate is fixed. It's not going to change. You told your lender, yes, that's the rate I want. I'm locking that in. So it's locked. It's frozen for you for a certain period of time, because there's a different amount of time you can lock in a rate for. A fixed rate loan is just referring to if you have a loan where you have one rate for the entire length of the loan, or if you have what's called an ARM, which is an adjustable rate mortgage, where that rate can change over the term of your loan. So that's what those two terminologies are.
Going back to the condo thing, there's a lot of people starting to say things in the comments about condos. I had a friend who was going to buy a condo off of Barton Springs. I got him under contract, $15,000 below list price. So I want to say it was like we're in a contract at 450. It was a 460. Yeah. So it's $15,000 below list price. I don't even want to look at what prices in that building are now. They're probably 650, 600, 650. Like sometimes I just wish people would listen. True, Ian, always a possibility. Don't know what that means, but okay. Muhammad, man, you're firing out stuff in here. Thank you. Yes, but we are a big country with lots of land, and there are 26 times smaller, I think. Something good to know. Good to know. All right. Do you have enough batteries for the metaverse? That's the question. Ian said that if in the metaverse, in the real world, the power goes out, I think you're screwed in the metaverse. Isn't that what you were saying, Ian?
No, Joe and I were having a conversation. He was saying that what happens if the power goes out in the metaverse? And I said, my reply was, what happens if it goes out in the real world? And we saw a few situations where it was pretty drastic, with our Snowmageddon, for example.
Dude, during Snowmageddon, I was boiling water like crazy because I couldn't flush my poop.
My point is you had to adapt. You had to figure it out. There were people that didn't do that.
The HOA covering insurance isn't always true. That sometimes happens, but not always.
Well, so I have a South Pottery property, and yeah, we have insurance on it and all that. It's great. I think our HOA is like $400 a month, but I just got hit with a $5,000 bill because they're redoing all the exterior of the property. $5,000. Everybody did. So yeah. So the problem with that too, but you're going to have in a home, you're going to have maintenance fees. I've already also replaced the stupid water heater and the HVAC in that place. So that sucks. Right, Kevin?
Only a geriatric millennial will call it an HVAC.
I call it an HVAC. Wait.
Elder millennial, Ian.
Yeah.
Sorry, elder millennial.
What do you think of Lennar?
I'm going to go ahead and say I am not a fan of Lennar.
Wait. Who is a fan of Lennar? Raise your hand.
Hey, I don't hate them. I'm sorry.
No, I didn't say hate.
I didn't say hate.
Fan. Who's
I'm
an
a
only
fan.
fan of Lennar right now?
OnlyFans? Who's subscribed to Lennar's OnlyFans?
Who
Yeah,
would if they had?
it's a lot of the pictures are all a bunch of crappy work. That's their porn.
I actually don't hate their work. I don't like how they treat people
Oh yeah,
right now. Wait. I don't like how today, especially, they are treating some of their clients and their realtor partners. That's what I don't like.
Here's the deal. I've closed several properties with what was Village Builders, now Lennar. And here's what drives me nuts about some of these builders is that the people that work there, some of them that work there are fantastic people. And then you have but they're beholden to whatever the company says. And so they have, like, while they're the one taking the punches of the face over delays, over, the builder trying to terminate on you because they want to sell the property to somebody else, whatever it is, I feel bad for some of the reps that work there, some of the construction managers. No, they're not all great, but I've worked with so many good ones and so many different builders. It's rough when you have stuff that's out of their hands. It's tough.
I think what's really, just on a side note, I think what's really helpful though, because what I've noticed issues coming up on our end is when you have a sales consultant or a sales agent at a builder that's actually honest with you, especially with timelines. Like, things are going to come up, and I appreciate those are like, we don't know, we think it might be here, this is what we're needing, and these are the delays, versus I have another builder where they're like, oh no, we're definitely closing around like December 16th. So we went ahead and they said that several weeks in a row, we went ahead and locked based off that with a cushion. And now it's February, or now they're saying February. Like, they've moved it out several times. And now it's going to hurt my client because he's past the rate lock extensions he can do. And the rate he locked at the end of November is not going to be the same rate now. And we went off of, the information from the builder because he was like, no, it's definitely closing in December, versus being more honest, which they could have, which is like, oh, we're not sure. We think this is a good date. So I think that's really important with sales consultants. There's some really great ones out there, but then, like you were saying, there's some others that, just don't treat people as well.
I mean, so I'm building with Guillen Homes right now. And I have to say, delays. Fine. They're explaining, every time there's a delay, it's like, it's well articulated to me what's going on. The rep is emailing me. I'm constantly in the loop of what's going on. Am I upset that we're delayed? Yeah, it sucks because obviously it's going to cost me more with the rate because Sarah didn't tell me to lock. But I'm kidding. But I mean, the rep is fantastic. The construction manager is fantastic. Everybody's communicating. Everybody's doing what they need to do, but they're stuck with, all the same delays everybody else is seeing. So it's tough to get upset with them when I know they're all doing what they can. It's some of the other stuff that the builder, not this builder, sorry, but some of the builders I see that are trying to pull homes out from under people so they can resell them. I've literally had an experience where that happened with a different builder and it sucked. And that rep said a lot of things that were not true. She wasn't trying to be malicious until we found out later she was, but she just said a lot of things that weren't true. And that's tough when you're trying to build a home and you're trying to get straight answers and you just get the runaround from some of these people. So anyway, I'm off my soapbox. Interest rates are really 3.75 for conventional. Hard to believe someone I know quotes less than 3.5 for a condo property for multiple lenders.
When did they get those quotes?
Yeah.
If it was yesterday or even, last week, Friday, it's going to be different than it is today.
Exactly.
Yes.
I don't know why you'd argue with the lender right now who looks at this every day.
It was that Instagram lender who said,
And are they paying
and then
points?
The points, yeah. So yesterday, and are they paying points?
yeah, it's true. Who often do builders use under promise and overperform?
I think on that one.
Yeah, no, I got that. I was just having fun with it. Who often do builders under promise and overperform on the timeline of building a new home?
The client. Oh, how often?
How often? Sorry.
After Kevin already said that. Sorry.
Yeah.
Pregnancy moment.
I mean, I'd like to hear from these guys, but I mean, there's several times that the builder rep is trying to be very upfront with their delays. Do you see that? Bueller, anybody? Kevin?
So,
Ian?
I mean, my recent builder experiences haven't been bad.
Yeah.
So I don't know that I'm a good person to ask because like I can't think of a bad builder experience I've had in actually quite a while.
Wait, just an experience, a bad experience? I can give you bad experiences. What are we talking about?
But you also said you don't work with very many new builders.
Who said that?
Kevin, last week.
We do like weekly status update. We do monthly and then weekly status updates after we get to a certain point with new builds, especially. So my team usually does a pretty good job with communicating with them. But I will say that I've had some issues where the client doesn't want us to communicate with the builder because they're scared the builder's going to pull the contract still. Or the builders told them, like, stop bothering us. It's going to happen when it's going to happen. And that just shocked me. I don't know if y'all have had that same experience, but I just can't believe like a builder would say, stop bothering us. It's going to happen to a client, when they're just trying to figure out, like, do they need to sign a new lease for the rental? Like, where are they going to live? Just trying to get an idea when their house will be ready. I just don't think that's right. I mean, have y'all experienced that at all?
Sorry, I didn't hear a word you just said. a Tom Ferry coach just did a duet of the reel I did this morning. Sorry, it was too funny. Anyway, somebody respond to Sarah.
I know I've completely forgotten what the question was.
Basically,
I'm distracted.
It's fine. No, basically, are you guys still having issues with any of the builders that you're working with or reps that are telling clients or telling you like not to bother them? It's going to happen when it's going to happen. And clients are scared to get updates.
I have not had that experience.
I haven't had it recently. I'd be curious to find out who that builder was, or the builder rep was, the community. I mean, yeah, I've had experience with the builder reps. I'm working with a builder right now that I've not heard once from the rep at all. Mm-hmm. So that's frustrating, but anyway. Yes, rates do go up for investment properties as well.
Yeah. Second home stuff.
Yep.
Go
ahead. Second home stuff. Let's go.
So basically the news had come out this month from Fannie and Freddie Mac that they're increasing the cost to purchase second homes and vacation homes. So that's going to start April 1st. So what that means for everyone else in the world is that you're probably going to see massive rate increases starting in March for second home and second home and vacation homes. So if you're on the fence, or if you've been looking for a second home vacation home, do it now and get under contract and lock in a rate before March. Because right now, second home vacation homes are the same interest rates as primaries. That's about to change. So if you're on the fence, do it now before you start seeing those rate increases, because that's going to hit people pretty hard.
The main question is, how much do these rate increases actually, because let's be honest, I think it was probably like 18 or 20% of buyers last year were not first-time buyers, right? So they were buying investment properties or second homes. How does that impact the market this year? That's the question. What do you think, Kevin?
I don't know, man. I wasn't listening again.
So
I feel terrible.
So the question was, is that with them announcing rate increases for
the
second home purchases, and
Oh,
about
yeah.
20% of the purchases last year, we saw that around the 18 to 20% were people buying second homes or buying rental properties. How does that impact, especially the Austin market, which is kind of expensive, right? The median's 480 for the 475 for the MSA. Like, how does that impact our market this year?
I don't think that it does. I think that people buying second homes aren't as price sensitive to even any additional fees. So that's just my personal opinion on it, or less sensitive to it. It's not going to keep them from doing it or not doing it. And I don't think that, I still feel like last year would have been crazier. I think because a lot of my clients now that are circling back this year didn't get to buy last year. Right.
Yeah, but they're also paying a hell of a lot more this year.
So I kind of disagree a little bit. I think that it will impact because I feel that I think it'll impact where they buy. So I think if someone wants to buy a second home or vacation home and they're thinking about buying here with the purchase price with increase as well as with the rate increase that they're suspected to have with that loan type, I think they might look for something like a vacation spot that might be a little bit more affordable, to help compensate. Because I agree that they're probably not as sensitive to price to a point or the amount they're going to spend. But I mean, at the end of the day, I'm still going to look at my, bank account and be like, okay, how much do I really want to spend each month? And if it's going to be like $1,000 difference a month, or 500 to 1,000 a month, that might make a difference. I have to really love that place that I want to get that second home.
But would you say that they would be more sensitive to money or the location of where they have and they mentally spend their vacations anyway? Right. Are they going to be like, well, is it worth a $500 or $1,000 difference per month? But I love Austin. We love going there. We love being there. We love vacationing there. Are they going to go now decide that they're going to go to, I don't even know where else I would go, but somewhere else? Would they be that sensitive, you think, over that, even any sum of money, unless it's like double?
I think it depends on kind of what, I think you hit on this a lot. It depends on how important it is to them, right? So if they're like die hard, like I love Austin, we're definitely going to be there for X amount of time each year. Maybe not. But I feel like at the end of the day, it kind of also, a lot of people come down to money and, and how much it's going to cost them. It's like, I would love to have my own island, but I don't know. That's a little extreme.
We said though that 20% of home purchases were secondary purchases, but we didn't distinguish between whether they were for an investment property to rent or for themselves to vacation to. I actually don't have any clients that have purchased here to vacation to here.
Oh,
right. They buy here or they buy here to invest. So that's what my clients do, is they buy extra homes here to invest in, not to live somewhere else and then vacation here. That's why I don't think it'll have an effect.
Oh, got it. Yeah. So the clarification here is that there is a difference between the second home, vacation home, and an investment property.
Yeah.
So the increase is going to be that we're expecting to see is on the second home vacation property, not the investment property.
Which is why I don't think we will be affected like as much as Sarasota or something like that.
Yeah. Agreed.
What's interesting is I'm thinking back to a client that I had last year that bought an almost $4 million home. And we're talking about interest rates in the 4.5%, and a loan for a $4 million home is not going to have a lower interest rate. It's probably going to have a higher interest rate. And he was so dead set on interest rate and nailing down interest rate that we actually lost a property because of it. I'm trying to think of how that would go this year, right? Buying a $4 million home and then him realizing he's going to pay 4.25 on a mortgage like that. That's a huge difference. Talking about a mortgage cost, it's a huge difference. I want to give a quick shout out, and I'm not going to do don't send me your listings to put on my channel. I'm not going to do this. So I'm doing it just for a client of mine that is closed or renting out this property. There we go. So this is a South Austin home. It's going to be a 3 to 5 month rental, $5,500 a month. Look at that.
So
It's
nice.
a pretty stellar house.
Oh,
You're looking
wow.
for a
That's
3
cool.
to 6 month rental,
Bro, that's
fully
crazy.
furnished.
That's no. Oh, it's fully furnished.
Fully furnished
Oh wow,
that
that's
helps.
not bad.
on Zillow right now. I'll drop the
Wow.
link if you want it. But if anybody's coming out here wanting a, let me clear this up. There we go. Get
Can
this
I
out.
throw
That works.
bender parties?
Well, it's 3 to 6 month short term
Will
rental.
the
So,
neighbors be mad?
I can't say
Bro,
anything about the neighbors in this
I get a
neighborhood. I
next
love the
door.
neighbors. in
I
this
get a
neighborhood.
next door digest still for some neighborhood I previously lived in.
Oh my god,
And
those are
the
ridiculous.
most trending one was basically some guy telling people, don't walk with your strollers in the street. You need to use the sidewalk. I was like, bro.
Sarah, past year we saw interest rates fluctuate up to 3.45, 2.7. Couldn't go down again next month as happened in August. I mean,
Yeah, so I don't foresee because of where we are in our with inflation and everything else that I talked about earlier. I don't foresee rates going down in next month. But like I mentioned earlier in the show, I do foresee rates going down after we start combating the inflation issue and we see our first federal fund rate increase, rate hike. So probably in the second half of the year, we might see a decrease in. We're probably going to see a decrease in rates. It's just how much of a decrease. I do not think we're going to get down to the twos again. If we do, fantastic. I'll be happy to tell all my clients about it, but I just don't think that's realistic. To be honest, that in itself was a fluke. Like that's the lowest rates it ever been. So I kind of see this problem coming in with younger folks buying right now is that they're a little disillusioned on what a normal rate is, right? And I don't know, and you guys can tell me this if you've seen this with your clients or talking to potential clients as well, where they'll be like, where they're so scared and frightened of rates in the threes when that used to be an excellent rate and that was a super low rate. And instead they're like, oh, I'm going to wait. Like normal rates are in the twos. And I bored everyone. Okay.
yeah, they're all gone.
But they're.
I think that's I mean, look, I think people will be very scared of being into a high 3 interest rate this year. So, all right, folks, we've been almost 2 hours. Let's end it here. I appreciate you. Drop comments below. I want to hear from you. Are you, did you move to Austin? Do you regret it? I want to hear from you in the comments. And then secondly, are you following the shorts? If you like the shorts, I want to hear about that. We'll catch you in the next video. Thanks, Sarah.
Thanks. Bye, guys.